There is a growing perception that lithium is fast becoming the lifeblood of the global decarbonization initiative. This is due primarily to the superior battery chemistry that the material enables, making it optimal for use in applications such as renewable energy storage and electric vehicle systems. Given the critical nature of this essential metal, there has been surging demand from industries across the world, and an inevitable rush towards lithium mines, in a manner that has been almost unprecedented. Even the most conservative of projections indicate that lithium demand is expected to rapidly grow over the long term. Global lithium demand is estimated to stand at 250,000 metric tons by 2030, and then more than double to 550,000 metric tons by 2040. In fact, by 2050, cumulative lithium demand from the EV industry alone is expected to have surpassed 12.5 million metric tons. Given the magnitude of such growing figures, it is evident that lithium is a great pick for those seeking long-term growth. Exposure to this industry could ensure investors are well positioned to ride the global decarbonization wave. The stocks listed in this video are ideal lithium plays that will ensure sustainable, yet impressive long-term growth prospects. The first company we present is the South American chemical company, Sociedad Quimica y Minera de Chile S.A., which is better known as SQM. There are many reasons to invest in this particular stock, with the most compelling being the fact that SQM is the most well established in the global lithium game, with operations going back to 1968, and a market capitalization of over $25 billion. The lithium industry is one that is prone to vertical integration, so large companies that hold high-grade lithium mining operations are great picks likely to dominate the market. Furthermore, SQM has a tremendous opportunity that hardly any other lithium players face, which is its proximity to the United States. At present, the US is seeking to overtake China as the world's largest EV market, in which lithium would play a major part. The Inflation Reduction Act, recently signed at the White House, is likely to give a significant advantage to US producers, or those based in free trade agreement countries such as Chile. SQM is the most well-positioned lithium producer that could supply the dynamic US market, given the ease of transportation, and the high-grade output its mines can ensure. Most other players are situated in Asia or Australia, which gives the company a significant moat and head start. The potential with SQM is huge, making it an ideal long-term stock to invest in. Where the S&P 500 shrunk by 17% in the last 12 months, SQM actually grew by 72%. Moreover, the company delivered annual revenue of $2.9 billion in 2021, which it is confident in growing to $10.2 billion at the end of the present year. The second stock on our list is the Canadian, up-and-coming star, Patriot Battery Metals Inc., which trades in the Toronto Stock Exchange as PMET. Patriot Battery is an early-stage lithium explorer in the James Bay area of Quebec, Canada. Data from the company's early drill results suggest that it may be sitting on a world-class, top-quality hard rock lithium reserve. In terms of share price appreciation, PMET stands as one of the most successful lithium stocks, given that it rose by over 1,000% in the last 12 months, from 40 cents to $4.40. This epic growth takeoff does not come unsubstantiated, and is due to some highly compelling factors that position PMET as being the next billion-dollar lithium company. The company's 21,400-hectare Corvette project is of a monster scale, which experts claim has all the markings of a multi-hundred-million-ton lithium project, all within the world-class mining jurisdiction of Canada. Lithium supply of such epic proportions in the wake of overwhelming demand signals an incredible buying opportunity. It is for this reason that the company has been heavily in the spotlight, after catching the interest of strategic acquiring parties. The company is yet to initiate its operations and generate revenue, which makes it great for early bird investors looking to climb high in the long-term future. Before we move on to the next stock, we'd like you to know that we offer a morning newsletter to our email subscribers. Prior to the market opening, we send our subscribers an informative email about which stocks are moving or about to move. You will get an overview of key earnings reports, recent insider transactions, analyst upgrades, and downgrades. To take advantage of this offer, you can find the link in the description box. If you're still with us, it means you've liked our video. Do click on the like button to show your support. For number 3 on our list, we take a look at one of the foremost green players out there, the lithium player, FREYR Battery, which trades by the ticker FREY. FREY has a lot going for it, which would make it a favorite for long-term investors, most notably its innovative product offerings, as well as its highly sustainable business model. This gives the company a tremendous competitive edge. FREY has partnered with the MIT startup, 24M, which has reduced its lithium battery manufacture process from 15 steps to only 5 steps, whilst ensuring the same degree of effectiveness, which makes it highly competitive. The result is a lithium battery for electric vehicles, that comes at only 50% of the cost of competitors through its proprietary methods. Moreover, FREY is special in the lithium industry, because it is the most well-positioned to the growth opportunities of Europe, than any of its competitors. The company is all set to launch its Giga-Arctic factory in Norway within 2 years, which is expected to be the largest battery-producing plant, in terms of capacity across the entirety of Europe. Moreover, this 43 gigawatt-hour factory was strategically chosen to be set up in Norway, given the abundance of renewable energy sources in the country. The result is a carbon footprint that is almost 80% lower than that of its global competitors, adding to the sustainability of its batteries. Although FREY is still a pre-revenue company, it is aiming to take the lithium industry by a storm. With almost $500 million in cash, it is set to smoothly execute its far-sighted and innovative ambitions with excellence. The stock is one of the best in the lithium space to ensure long-term growth. Next up, we take a look at Sigma Lithium Corporation, the $3 billion Brazilian explorer and developer of lithium deposits. Sigma Lithium, which trades by the ticker SGML, has all of its lithium assets located within Brazil, including the high-quality hard rock lithium mine, Grota do Cirilo, in the mining-friendly jurisdiction of Minas Gerais. The company holds almost 30 mineral rights in this location. Over the years, Sigma has undertaken critical milestone updates that have put these mines on the path to meeting global lithium demand, which has been surging since the COVID-19 outbreak. After 10 years of investment and development, Sigma has now gained access to the largest and most abundant mineral mine in the Americas, and is ready to execute. Its shareholder-friendly management, coupled with its high-grade assets, makes the stock a prime one to invest in for the long term. Although the stock has climbed from $9 to almost $30 in the last 12 months, it still has significant upside potential. One reason for this is that it has delineated lithium resources at merely 5 of the 9 known artisanal deposits. Similarly, the company is supported by the strong secular tailwinds of the global clean energy and EV transition. The SGML stock, therefore, is clearly a screaming buy. For the final stock on our list, we take a look into Pilbara Minerals Limited, an Australian mineral and metal miner, which trades in the OTC as PILBF. The company takes its name from the Pilbara region of Western Australia, where the company's fully owned Pilgangoora lithium and tantalum project is based. In the wake of increasing lithium prices in the global markets, Pilbara has been steadily upping its production to take full advantage of the growth opportunities. In its most recent annual release, the company delivered revenue of over $821 million, compared to the prior year's figure of $131 million. As a result of the high growth trends the company faces, it has set its top-line guidance for almost $2.3 billion, which points out the massive upside potential inherent to the company. During the 2021 to 2022 period, Pilbara's EBITDA figure had risen from $21.4 million to a whopping $815 million. Given these figures, it would be safe to say that the company is maximizing its output capacity to meet lithium demand, and grow its operations accordingly. This is partly why PILBF stock has ballooned by over 120% in the last 12 months alone. The stock is far from reaching its peak, and still has a significant growth trajectory to enjoy. Its positioning as a stable lithium supplier in the Australian region makes it a great business to tap into the lucrative Asian and Oceanian markets. The stock is a great pick that grants investors exposure to the booming lithium opportunity. That's all from us in this video. We hope the insight we aimed to deliver has proven valuable to you, and would allow you to ride the growth wave that the lithium industry anticipates experiencing this decade. We would love to hear your feedback about our list in the comments below. To gain a deeper insight into different stocks that are fit for various investment strategies, be sure to check out our website, stockstelegraph.com.